Welcome back to Finance News, the only show you need for all of the week's goings on across the stock market, business and investing. If this show was on the stock market, it would definitely be a penny stock, but then I'd hype it up on YouTube and claim it was good investment because stocks only go up. Anyway, with that out of the way, let's get straight into this week's headlines from the US, UK and around the world. Palantir released its Q4 earnings this week to the street with impressive growth numbers across the board. The software company grew its revenues faster than expected, although slightly underperformed on earnings per share. Palantir's Q4 revenue came in at $432 million against expectations of $418 million, and delivered a 47% growth on US commercial, as well as a 26% increase in its government business. The company fell slightly short on expectations around adjusted earnings, taking into account stock-based compensation, where they earned 2 cents a share, which was down from 3 cents a share the year before, and lower than expectations of 4 cents a share, according to analysts surveyed by FactSet. The share price is down over 12% this week, and was down over 15% after earnings were announced. If it's any consolation to bag holders, Cathie Wood's ARK funds dumped quite a few shares of the company on Thursday, continuing the behaviour of buying on the way up and selling on the way down. Sounds sensible to me. In earnings in the physical bricks and mortar world, Walmart reported earnings this week. The US supermarket giant announced revenues of $152.8 billion and earnings per share of $1.53, which were both above expectations set by analysts on the street. Net income came in at $3.56 billion compared to last year's $2.09 billion loss. The company also raised its dividend to 56 cents, up by 1 cent, and said that it plans to repurchase $10 billion of its stock in the fiscal year of 2023. Shares in the company jumped 4% on the good news from earnings to $138 a share, but are only barely up over the year-on-year price when compared to the S&P 500 index, which is currently up over 11.8% over the year. This week, Cathie Wood of ARK Invest said on Thursday that technology companies in her innovation-focused portfolio are drastically undervalued, and she believes that her fund's recent sell-off is short-lived. In an interview with CNBC this week, Wood said that innovation companies are now in the bargain basement and that they are significantly undervalued. Her flagship ARK Innovation ETF has been hammered by the recent sell-offs in tech and growth stocks, down 26% this year to date. Some of her big holdings include Zoom, Teladoc Health and Roku have tumbled as much as 70%, with fears from investors around rising interest rates. Addressing the issue directly, Cathie told CNBC that higher rates typically punish growth pockets of the market that rely on low rates to borrow for investing and innovation, and their future earnings look less attractive when rates are on the rise. She added that investors are doing the opposite of what they did in the late 90s. They are running away from innovation apparently and escaping to the safer havens of larger, more established players. Although the fund has been performing badly against the wider market, net inflows to the fund are up around $70 million this year according to industry analysts. The superstar fund manager asked investors to be patient and give her 5 years to show the value of some of the stocks within the portfolio. The only issue is I'm not sure when the 5 years starts. Is it today, last week, or do we just reset the clock? Let me know. In news closer to home, the FTSE 100 gained 0.3% on the Friday open in spite of Storm Eunice heading for Britain, prompting major risk to life warnings across the country. A red warning, meaning there is a danger to life from flying debris, is also in place for parts of southwest England and South Wales. All trains in Wales are suspended and hundreds of schools will be closed while the military is on standby. The FTSE 100 rose after new data showed UK retail sales grew faster than anticipated in January. Figures from the Office of National Statistics suggest that inflation has not massively impacted consumer spending yet, with the volume of goods sold online and in-store rising 1.9% and providing a much-needed rebound from the Omicron-induced 4% knock in December. The growth came despite UK consumer price inflation edging up to a new 30-year high of 5.5% earlier this week. Looking more closely at the story, the BBC reported that UK living costs are hitting a new 30-year high as consumers are being hit with rising inflation, increased costs of energy, and the increase of national insurance contributions set for the new financial year. Costs of household staples are also rising, with pasta prices up 15%, cooking oil up 16%, and margarine soaring 37% in the year to January, squeezing households' budget even further. I'm pretty sure though that chocolate oranges are still on sale at Tesco for £1, so as long as they stay like that, my lunches are yet to experience inflation. Winning. In company news, NatWest has reported pre-tax profits of £4 billion for 2021, which is up from a loss made in the previous year. The taxpayer-owned bank delivered the results on Friday, which were up from £351 million loss made in the previous year. The profits have been boosted by rebounding in consumer spending and strong housing market demand after the easing of lockdown restrictions, as reported by Sky News. However, analysts warn that the bank has depended a lot on this mortgage business, and with signs that home buying is slowing down, the bank may not be able to rely on all that income for much longer. Sorry guys, it can't all be good news. Up in the windy skies, Airbus had reported bumper profits with results of 4.9 billion euros in 2021, which is nearly $5.5 billion and nearly 3 times the amount delivered from the year previous. The company now expects to deliver 720 new jets this year, up from 611 in the year before, and the plane manufacturer is also planning to pay its dividend for the first time after suspending it for the past 2 years. However, they do not expect the bump in demand to rise or fully recover until 2025, as the supply chain issues and the rise in inflation are set to have an impact on the business as they seek to sell their wares. In random news I found this week, the container ship called the Felicity Ace caught fire and is now stranded in the middle of the Atlantic. All of the crew on board are fine and have been evacuated by the Portuguese Navy. The ship is mostly full of luxury German cars from the Volkswagen Audi group, which includes a ton of brand new Porsches destined for customers in the US. The fire is still burning but under control apparently, but then there's nobody on it, so who knows. If you get to it quick enough, it's first come first served, all you can fit in your basket. Okay, that last bit isn't true, but their tugboats are on the way apparently. Now, that's all of our headlines, no IPOs this week, so let's head over to the fails section to see who's made the biggest blunder this time. Just when you think it couldn't get any worse, fails of the week. This week's winner of fails of the week gets awarded to our dearest Elon Musk and his infamous Twitter account. The Tesla boss got himself in some hot water this week comparing the Canadian Prime Minister Justin Trudeau to Adolf Hitler. The insensitive remarks have since been deleted, but there's been plenty of backlash and criticism from the Jewish community. Musk did not comment further on the issue, but also tweeted out against the Securities and Exchange Commission, claiming that they've been harassing him for speaking out against the current US administration. I could easily dedicate an entire section for Elon just on his Twitter page alone. Maybe watch this space. Anyway, with that out of the way, let's head to our lighthearted section where I go through some of the best posts on Reddit's Wallstreetbets. Welcome to the best of the bets. When interest rates are set to rise by a tiny little amount, but inflation is running rampant, this is what I picture in my head. Summed up pretty nicely indeed. Even Tom Hanks can't save us now. This video is an accurate representation of what the stock market is currently like on a nearly daily basis. Along comes poor retail traders like you and me, and then all of a sudden we get buried in stock. But then come again the next day and we do it all over again. At least each day is different, right? And finally, if you're ever in the red in your portfolio, just remember that there are plenty of people worse off. I mean, this Redditor who's not only lost 98.8% of their portfolio, but they're also about to run out of battery. At least if his phone dies, he doesn't have to stare at his trading app so the losses disappear. Pretty sure that's how trading works, right? Anyway, that's all we have time for this week. For any other news content, please check out the Finance News playlist on my channel where we cover this week's news. Otherwise, please feel free to check out all of my work on investing for beginners. Drop me a like if you found the video useful, subscribe for more, and I'll see you in the next one. And as always, happy investing.